Welcome to this week's edition of Trading Bits and Bytes. I'm Susan Littlefield. We know we had a WASDE report come out on Thursday. Was it a flash in the pan, or is it something that's going to stick for a little bit? How much influence are we going to see on weather, and how much influence is this report going to have as we move into the days and weeks ahead? We're going to get all the details with Jeff Peterson with Heartland Farm Partners. Let's start out with this WASDE report. Is it going to get buried pretty quick and we're going to move on to something else?
I really think it is. I think actually as soon as it came out, I think we already saw the numbers and everybody said, you know what, let's go ahead and now start focusing on the weather and we can move past the report. I think the lingering effect from over on the wheat side, it'll linger a little while there, but everything else I think will move on to looking at weather.
What was the sticking point for this wheat complex?
Yeah, I think on the wheat side, the biggest thing is that, just the production numbers were just bigger than what a lot of people were looking for. And as a result, that just increased our ending stocks. And anytime we see an increase in ending stocks, unfortunately, that's going to end up having a negative impact on the price side.
But you did say weather is going to be the next influence.
It really is, and the weather is going to be important. And actually the weather, Susan, if we were to lay it out and put it this way, it's really our last hope, I think, in order to be able to get some higher prices. Because if we're going to have higher prices down the road, higher than where we are right now, and getting hopefully people back to their break-evens, it will have to be weather, but it'll have to be weather serious enough that actually causes a yield impact. I don't think the whole thought of it just happening will be enough, but that's what we'll have to see as we go forward.
Demand for corn versus ethanol, are we going to see some reductions taking place?
We've seen some reductions already, but it's encouraging that we're continuing to see the numbers come back up on a weekly basis. And actually what I think we're going to find, Susan, is that we're going to find that in addition to the demand on ethanol to be blended, I think we're finding some nice export demand also, because we can't explain the drawdown on stocks that we're seeing unless we have to talk about really the export side. But I think even though we said that, I think as we move forward down the road, we will have to see some lower numbers on the corn demand for the ethanol side going forward.
Well, speaking of exports, how do you think we're doing so far?
Well, we're on pace. On corn, I'm glad we didn't see any adjustments there. We're on pace to hit that number. A little bit surprised on the soybean side. They did lower the numbers on soybean. They brought them down 25 million bushels. We think that's a little premature. We're starting to see a little bit more demand come in from China. And as a result of that, I guess we're saying we think we can hit that number. And if China would really try to step up to hit their phase 1 trade deal, there's a chance that we could exceed that number yet. And the crush, it was great to see them increase that crush number. We'd been watching that. The NAPO crush number came out, and we'd seen that it looked like we were ahead of pace. So it was actually good to see them actually increasing the crush demand.
What is the technicals looking like for corn and beans at this point?
The technicals are really important this year, mainly because of the fund position being so short on the corn side and a slight long on the bean side. Overall, the technicals, if I was just a pure technical trader, Susan, they'd be flashing buy signals according to the MACD, which works according to the moving averages, but then also according to the stochastic, which is really a momentum indicator. They'd be in a buy signal.
There's been that water cooler talk about guys still having unsold old crop corn and beans. What do they do?
Yeah, that's a really hard one, because here's a few things that we've found, Susan. It seems like everybody will go ahead and take way more risk to avoid a loss than what you would expect them to. And so on this remaining old crop, it seems like it's in pretty firm hands. What I'd be doing right now on the old crop side, I'd be looking for some basis opportunities, look to get that locked up. That way you could move these bushels. And then I do think we'll see a little bounce in here. I think weather will come into play that will give us a chance to sell at a higher price. But here's what we have to really do on both the old crop and the new crop side. We have to think about what's going to trigger our sale if we don't get to a break-even level. And that's where down the road we'll talk more about how PLC coverage comes into play and how that may be needed to really get you to a point where you're comfortable selling.
So what's it going to take to get these guys to be able to make some money and see the markets move higher?
Yeah, so if we really sit back and say the thing we're really asking, Susan, is what can we do to see this problem solved on this excessive production, really? And really what happened is we just brought too many acres into production. So we have to have a major supply problem to go ahead and knock down the production on the acres we have. Or longer term, what we have to do is we have to wait for the demand to come up. And really what we're saying is that the demand will come up over time, but it won't come up enough to solve this problem. It's going to have to be a weather-reduced, really, supply situation.
Lots of things to look at. Thanks, Jeff.
You're welcome.
Jeff Peterson's been joining us this week with Heartland Farm Partners, and that is this week's edition of Trading Bits and Bytes. I'm Susan Littlefield.